Good morning. We'll get started here in a minute. Somebody could type in real quick if you hear me all right. I would appreciate it. Do you guys hear me? Oh, I got that on. You should, oh, okay, good, great. Oh, hey, Gray. I'm actually going to try something crazy here. I don't know if you want to see this, but let's see if I can turn my camera on here. I've never used the camera in one of these webinars before. Click to share your webcam. And I don't, let's see. And let me put this out of the way here. Just now you should be able to see me on camera, I think. Is that working? Oh yeah. Okay, great. I'll leave it on for I'll leave it on for a little bit, and then I'll turn it off once we get going a little bit. We'll give it another couple of minutes here for some more people to show up, and then we're gonna start. I'm gonna go over a little bit about what I do with my service to begin with, what we do every day, and then I'm going to talk a little bit about the opening gap course that I've built and am building. It's got the first 6 modules done, and I'll have a couple more done by the end of this weekend. And it will have about 15 when it's through, at least 15. And it's coming along. And then we're going to take a look at just some basic February stats and the last 2 days of the month. A couple more minutes and then we'll get started. I might even be able to show you my messy office if I take that camera down for a second. It's a little bit messy. Okay. Let's see what I got going here. Well, let's get started. Good morning. Thank you for spending some of your time here with me today. I have done a few of these webinars and I try to make it worth your while for being here. So you're definitely gonna get some good stuff. You can see on the screen right now, this is the product page of HandelStats. And of course I have this basic product page. It's got a few things, you know, the introduction to why I chose HandelStats, the inspiration for the name, and what comes with the subscription, and then a couple little articles and videos of things. And I put out, this is these are downloadable PDFs. You can go in there and grab those. These are free to anybody that just signs up, and I don't send a lot of emails out. But these are the market caps as of 12/31/22 of the NASDAQ, the Dow, the S&P, and the Russell 2000. So it's got the stocks that comprise the index and the market caps. I'll show you. I update that sometimes, put it out. I'm planning on updating this like the end of the month kind of stuff. And then posting it there at some point in time. I put out a free daily pivot sheet. This is Fridays. If you go in and download it, this is what my free daily pivot sheet looks like. It's just the futures, high, low, open, close, 4 o'clock close, 4:15 close, the daily change, and the fair value. And then there's some pivot points from a no pivot system, and the pro sheet has the standard deviation levels, and then there's a cash section of the sheet showing the Friday close, and then where we are within the week, the high and low, and the prior week's high and low, prior month's high and low. I got to update this yearly close, but it's just a way to keep keep track of where you are in relation to what the high and low of the week is. I mean, I print it out every day, and I've been using that for, or some version of it for almost 20 years. Let's close this and go back here. Then in the Pro section, this is the, it's got instructions for all the sheets. I have 7 sheets that I put out every day. And when you go down and open the daily file, there's Friday sheets. You can either print them, but definitely download them. And I have things like what we use in the morning, especially. I use this every morning to look at the, these are average true ranges. I look at the open range and see how we're doing on the current day and the first hour. And then of course I trade the last hour every day. So I look at these last 15 or 30 minutes and last hour just to compare where we are and what we've been doing. So we have an expectation of what's possible. I have and there are right here just above instruction sheets on how to use all those. And one of the things that I do, I think that is pretty good, is the standard deviation levels. Here's the instruction sheet for the standard deviation levels. And I go through here, I'm gonna do a voiceover of this real soon, but this just explains what variance is and standard deviation, volatility, normal distribution. You can go through, if you become a subscriber, you can download this and keep it. And I explain all the formulas and what I use and how I use it. And standard deviations are important. They're based on the implied volatility of the market, and I get those levels for the futures prices. And I actually did a study, which I will put out. I'm trying to do some more complicated graphs on it. I'm going to put out in a little while, but it absolutely showed that last year, the levels that I used for my standard deviations worked in the S&Ps just as they were supposed to. 95% of the time we were within a plus or minus 2 standard deviations of the settlement price on a daily basis in the ES. The NASDAQ, however, was not. It only worked 85% of the time. And I've always said that the NASDAQ is a wild beast to chart. The S&Ps chart really well, the NASDAQ not so well. You can obviously expect more movement from it, and it's because the index is so dominated by the top 6 stocks. Once again, this is just an explanation of all the formulas and normal distribution, you know, how volatility or risk works, and then here's the options pricing model. And then here are the sheets that I print these sheets out every day. Here's my ETF standard deviation table. So I cover these ETFs every day. And you can see that there's the settlement price and then the 1, 2, and 3 standard deviation up and down, along with the prior day change in price and the implied volatility that I'm using that day. So if you trade ETFs, QQQs, spiders, IWM, or any of the multiples, the TNA, TZA, or if you trade the interest TBT or TLT, I mean, it's there every day. And I think that once you get used to seeing these standard deviation levels on your chart, it's a wonder why you would ever trade without them, because they work so well. The options pricing model, although it has, you know, some small flaws. I mean, it doesn't work all the time, obviously, but it's still used, and there's a reason it's used, because it works the vast majority of the time. Anyway, that's let's see here. I have the here's my future standard deviation table. I covered the SPX because I trade SPX options quite a bit. The ES, the spiders and the Qs once again there. Then there's the NASDAQ, the RTY, and crude oil that I put out with these standard deviation levels and implied volatilities and changes every day. Let's close this and let's actually take a look at like my chart for yesterday. I got it. I have it right here. Yes. Let's look at this a little larger. This was yesterday's chart showing my standard deviation levels. Here's this is an hourly chart, a 24-hour chart, and these are my color-coded lines. I have which I teach everybody to do, and if you've done any charting at all, it's real easy to catch on to my 1440 charting method. I call it my 1440 time fractal charting method because I look at time as important as price. Yesterday, you can see this color bar here is actually one of my fib extensions. And the first move up before, and they failed it from that, was this fib extension at 40.93.79, and it failed. It went to 75. And I've had this number on my chart for at least a week. And then here was my 1SD level yesterday at 4109.40, and the high was, pretty much right there. And then they fell away from that, which I was a little bit surprised at because when we've been trading higher for the week, and especially making a new high for a period of time, they usually don't back off like that. And I was a little surprised that they did, but here's I want to look at the NASDAQ chart and show you something else we've been looking at in our room for a while. And this is the range that the NASDAQ's been trading in since October. And I think with yesterday's close up here, we're probably going up here to this 13,394 level at least, especially if we hold this for a day or two. A monthly close in this area probably definitely going there, and I think it's real high probability now. I know there's a lot of earnings next week and a lot of stuff coming out, but I think that's what's going to happen. The other thing I do is I use Ichimoku. Ichimoku is just a complicated, moving average system. But to get a general picture of how things are working, to know that the major trend is, in this case, up because you're above the cloud, and it gives a lot of information. And I look at this just as a general trend kind of indicator. And right here, we can absolutely see that we have room to move to the upside and still room to pull back, but probably a little more bullish right now, at least in the ES and in the NASDAQ especially, which has been lagging until recently when it's taken lead. And now here we are right up here, probably gonna, here's that level, that 13.3 on this chart, 98. But I think we're, we get above here, it's gonna move higher. So that's what I do with my service. I'm here every morning. We do an opening review. We look at the charts and look at the levels on the chart and look at what's taking place overnight, and then review for the opening gap. And I usually have an opening gap statistic. I should have copied one here, and I can actually look at this. Let's look at this chart here, and I'll show you what my gap stats kind of look like. Yes, let's go here. I have them here, and I'll show you every morning Oh, you know what? I can go straight to the file. I should have downloaded this earlier, this particular file, but I'll morning gap, and let's go right here. Update. This is I don't know what, it doesn't necessarily have yesterday's in it. It's got some other stuff because I was moving it around. But every morning, whether it's an up gap or a down gap, I look at the stats and plug it into my formula, and it tells the probability of filling the gap. Let's see, we can go here. Actually, I can do this and clear this out. Here's the basic steps on gaps. The current model that I have in here has 3,782 days, and of those 3,782 days, 24% of them were full up gaps, and of the full up gaps, only 45% of them filled. And then here's the partial gap stats, and then I can go to the NASDAQ, and I got to fill that one out too. Let's go to that page and change that. NASDAQ. Here's the basic NASDAQ gaps stats. Out of that 3,782 days in the NASDAQ, 855 of them were full gap ups, a little less than the S&Ps, but they filled a little more often because NASDAQ's a little more volatile. So these are like basic stats, and this gap stat course that I've designed and built goes in depth into what these statistics mean. And with some of the work that I've done with this, I'm always updating and enhancing these statistics to take advantage of these morning gaps, because there's a lot of points in them. We can let's see, let's go to, I have this, I'll go back here. Go back to this. So that's my pro daily files. Let's quick look at the webinars, and then we'll look at some gap stats, and then we will look at some stuff I have for what's coming up in February and the last couple of days here of January. In the pro webinar section, which every subscriber has total access to, I've got some videos on my SVXY, UVXY, like trading those. Here's some more charting stuff, and I'm adding stuff. I can't say all the time, but quite a bit. I try to do a weekly outlook every week. I've been off that for a little bit because I've been real busy with this new study. And then the educational webinars, you have total access to all these. There's like 25 webinars in here, weekly studies, basic gap stats, third quarters that ended down. I mean, Fed days, I've got all the charts of every Fed day. I think I have to update one or two, but all the charts of every Fed day for the past year and a half or so. Study on volatility, and most of these have downloads with them. And here's this is a great study. This study is worth the price of a month subscription. It's really good. It's got a lot of stats in it, and really important stats. I will be updating this one too. It covers all the way to the third quarter of last year. I have to update with the fourth quarter, and kind of analyze what's going on again. But it's a fantastic study with a lot of data. More gap stats, some June stats, stats on up and down days, volatility stats. There's over 25 videos in here, including some on I've got some on options that I was going to try to put a whole separate section. I'm actually going to build a whole separate section on options and option spreads. That's like a work in progress right now. I've got a couple option things that I definitely can put in here though for the time being. And then let's go back. So you have access to all those videos. There's a lot of stuff in there. There's a lot of downloads, PDFs with all that. Here, James says, I use 60-minute, 15-minute, 5-minute, 1-minute charts. Does this methodology, my 1440 methodology actually absolutely works on any time frame. Really, it does. I stick to 60 minutes, 120, 240, and 480 during the day, and then 1440 overnight. There's certain things that you have to set up to use it, but remember, the whole theory behind fractals is that there's repeating patterns, whether it's in time or space. That's the whole concept of that 1440 fractal charting method, is that things repeat themselves. And of course, that's why technicians follow charts, because they repeat themselves. But if you learn the method that I use to chart, it will change the way you look at charts. And you day trade. There's several people that follow me that are day traders, and the gap is basically, I mean, the gap is the first trade of the day. Whether you take it or don't take it, and with the information that I can provide, you can, the quantitative information that I use, and this is how I look at my gap stats. I look at my charts because they're most important. And then secondly, I look at the quantitative data that the gap study provides to help me decide whether I'm going to take that trade or not take that trade, or do a counter trend trade. They absolutely put the statistics, because there's a gap every day. I mean, there's 3,782 days in this study, and I go back to 2000, and I start December 31st, 2007, and go forward. Basically, financial crisis on forward. I think the markets changed then, and they didn't change per se that much as far as morning gaps go, but a little bit. And you're asking about my proprietary option indicator, or I'm not sure which I have so many things going on. I had an indicator that I was working on, I think probably back in like October, November last year, and I just got covered up in other stuff. Yeah, okay, you remember, Jan. And I haven't even looked at it for a while, because I redid these gap stats twice because I did them, and then a month and a half went by, so I actually redid all the stats again for this study, and I'm updating the other stats now for the rest of this study. And trust me, I've got more gap stats than anybody else on the planet. Just to give you an idea, well, let's go right here to my ES stats page, see if that's it. This is just a handful of the stats. I mean, I've got stats by day, by week, by hour, by month, by year, on gaps, on morning gaps. And here's Fed days, prior days, type stats. I actually look at the openings, and instead of just opening up or down, I actually have 22 different types of openings. 11 of them are up type openings, and 11 of them are down type openings. that I have stats on all of them. And I mean, some of them don't happen very often, so they're rare, but some of them, when they do happen, they work 100% of the time. And I'm constantly on the prowl for looking for trades like that. Anyway, let's take a look at the what I have in this opening in the gap course that I'm working on. There's an introduction, then I go over the meanings of the gaps. I go over some of the base stats, and then I talk about gap size, then gap type. These studies are all in there already. Gaps by days of the week, and gaps by the year will be in by the end of the day. Gaps by days of the week will probably be in by Monday, Tuesday next week, and gaps by month by the end of the week. Because I have all the stats already done, but I have to update them for the couple of months that I don't have in yet. And then the later gap lessons will be other factors affecting gaps like prior days, overnight trade, volatility levels, and looking at the opening range after the gap is. And then I have a concept of relativity that I think is pretty unique. As of right now, with the gap lessons that I do have done, which is 1, 2, 3, 4, and 6 will be done by today. 5, hopefully, well, maybe even by Monday. I just have to update the days. But with the 4 that are in there right now, I already have 150 pages of PDFs. Some of them don't have much on them, but there's probably 40 pages of gap stats with gap stats on them. And already almost an hour, 75 minutes of PowerPoint presentations. So by the time I'm through with this in a couple of weeks, getting the other 7 lessons done that I already have planned for, and I have PDFs in various stages of completion. And basically, I had them almost all done until I decided to update the stats before I released this. So it's like a lot of work to go back in and do that, because there's just hundreds of places where I have to add stuff. Let's take a look at, we're running low on time here because I really wanted to keep this to 30 minutes, but let's just look at real quickly the gaps by size. I think I opened that PDF opening gap. Ooh, let's look at this. Opening gap, let's look at this gaps by size. And I'll just scroll down here through here and see, so you can, let me see if I can get this to work right. Let me pull this over here and scroll down to the page that I want. Come on, move over. There we go. I don't know why it's not going down. It should have downloaded. Go here. Oh, there, open that up. Here it is. It was already at the bottom. Come on. Computer's getting a little tricky. So this is gap stats by size, and this is only looking at them one way. I have several pages of stats. This is up and down gaps by points and percentage from 2007, 12/31/07 to 1/6/23, and that's 3,782 days. And I, as I say, I have tables of these stats in here, and I talk about them in other pages of the video. I think there's like 45 pages in this PowerPoint with sound and a voiceover. And then you can actually see, by points, how often these up gaps fill and how often down gaps fill, and look at various levels. And there are some anomalies in here that we've discovered. that are kind of strange. In fact, we had one of them happen Thursday, and that was that huge gap down. We gapped down, I think, 1.3%. And I found an anomaly of where if you gap down by 1.25 to 1.5%, under a certain condition, it does just what it did, rallies back, which is highly unusual, but it's that anomaly, it shows up in these statistics, believe it or not. Let's see, we have one other question, a couple other questions. Richard, getting to your question, how do I use the stats to make a trade such as a gap trade? Remember, I use my support and resistance levels first. That's the most important thing. And I use the quantifiable statistics of the gap on whatever particular day it is. Let's move this out of the way, to decide whether to trade or not to trade. If a gap, you can see right now that full gaps fill less than half the time. So there's, at least in the ES, not in the NASDAQ, it's almost 49% of the time. They fill a little more often, but do you really want to take a trade with a less than 50% probability of filling? I mean, that's how I use them. And the other thing is that even that if you have those statistics, my gap stats that I show, during the day rank, I look at whether the gap fills within the first 5 minutes, within the first 25 minutes, within the first hour, or after the first hour. So even if it does fill, sometimes gaps, don't fill at all in the first 25 minutes of the market opening. Well, that's a useful thing to know, because if you're going to fade it, you for sure don't want to pull the trigger on a trade like that until later on in the morning. So that's how I use the stats. And there's other things which will come, like at the later end of the gap study. There will be actually looking at some unusual ways you can use these statistics. That's all I can say. Let me go to the next trade. Yes, I do trade, Jan. Mainly I trade, the way I'm trading now, because I'm super busy in the morning. It's a lot of work to get, to update my charts every morning, and then to run the gap study. And I update my charts. I'm usually on by 8 o'clock Eastern time. And I update my charts from 8:15 till 8:30, 8:40, and I'm here every morning, and I'm in the room. I have a room with Mr. Topstep. It's the handle room. So anybody that gets my service can come in the room. I answer questions. I show what I'm doing with my charts, how I draw my levels, the 1440 levels. And we'll answer any question that we have time to do. And then I have a private Twitter feed, Handle Plus, and I put out every day, what I see on the charts. What my support and resistance levels are, what I'm looking for to happen. I should have. I'll take a look and see what I said yesterday, and you'll kind of have an idea. I showed you that chart from yesterday, and it absolutely hit my level spot on in the ES. Where's that? Got to go back to that folder again. And the I do. Let me find this real quick. 1 second. Sorry. Be distracted for 1A. No, it wasn't 1A. It was 1A webinar. There you go. And that was yesterday's ES chart. Here was yesterday's NASDAQ chart. So once again, there's my standard deviation levels. There was one standard deviation. And this was a 1440 level, this 12,240.50. Well, on that first run up, that's where they stopped. They closed below the 1 standard deviation level on this hourly bar here and stopped at that, pulled back a little bit, and then of course went up. And this level up here is the every week with my service, I put out weekly standard deviation levels. And I post the weekly on Sundays. I post these weekly levels and I leave them on my chart for the week. And that's a 5-day 2 standard deviation move from the prior day settlement. And we just hit that to almost to the tick yesterday before it backed off. Now the NASDAQ has gone through it a couple times over the course of the year, but in the SPU, they have not. The SPU has respected those levels. Let's see if I still have this. Well, it wasn't on this one because it's a little higher, but I can show, I haven't taken it off this chart yet. There was the 2 standard deviation level for the week, 41.55.82, and on the downside, it was 38.16. So as I say, those levels, when I put them out this week, they're on Sunday night on my weekly standard deviation levels. That's one of the sheets I put out every day. You'll have those levels, and if you're like a futures trader that just, you want to know these standard deviation levels because it's a place to possibly take profits or get into a trade. They just work. And if you have other levels of some methodology that you use for charting, it's just it's a confidence builder when it comes to taking a trade. Let's see. I was going to look at the, I'll answer a couple more questions, but first let's look at, I popped up these studies for the last 2 days of January. And here's the last 2 days of January for every year going back to 2008. And we can see there's 30 days, and I have the last day here that I'll show in a second, but you can kind of look through this if you take a screenshot of this. This video, this webinar will be recorded, so you can go back and take a look at these, download it or visit it and look at these. But you can see that I did not add up the net changes there, but I think I actually had them. I do have them. Of the net changes. Let's take a look at one HandelStats. No, let's take a look at the last day. Here's the last day of January, and since 2008, these are up days. 6 up days, 8 down days, 1 unchanged day since 2008. So several in the last since then, some 2021 last year, big down day, 2020 a big down day, and of course last year a big up day. And there's the by percentage, changes. So they've had some big down days. And if we look at go back and look at that, the last 2 days here, last year, of course, the last 2 days were up. That was some pretty big up. The 2021 was a down day preceded by an up day, down day preceded by an up day, and then there's up days. And I'll show you another interesting thing about some January stats in a second. Here's what I was going to show. Here's I put these out to every month. I'm always jumping in and taking a look at these studies. Here's January since 1970. There were 30 of them were up, 23 were down. And net, all those Januaries, they lost 7.66 points. But when you drill into this a little deeper and you look at January since 2008, where there were 6 up and 9 down, most of those points were lost in that time period. So prior to 2008, January was a positive month. Post 2008, January's been a negative. So this month here being a positive at this point in time, and I don't see any reason why it won't stay positive, is the anomaly. And I have another interesting stat on that, and we can actually take a look at that in a second here, because we'll look at the February stats, which I have right here. Here's the February since 1970, 23 up, or 30 up, 23 down. And then the largest point gainer was in 2015. Largest gainer by percentage was in 1986. Largest loser, 2020, COVID. Percent loss, 2009, 10.99%. And then average gain in up years, average loss in down years, and then net since 1970, minus 175. So January's also been a poor performing month, but if you look at what's taken place since 2008, of most of those points were, have been losers only here recently. And I was talking about one of the studies in my pro video section. That quarterly study kind of really drills into this and shows some real basic changes that I think everybody should know about. It's a great study, if I have to say so myself. I wanted to. I didn't get a chance. This is not updated for February yet. These are still January stats. I'm going to do the same thing for February that I did for January. I'll finish this up this weekend. It won't take me that much longer, but I just showed you up there. Here's the since 1970 and since 2008, and then I'm going to add what happened pre-2008 here. And I do this every month, with these stats, so it just gives you kind of a little color as to what's going on. Let's see, I think that's about all I have to share right now. The thing that I would like to tell you about my my new gap course is that I'm offering it for $1,499, and I think it's a bargain. And that comes with 3 months of my live daily service. And I'm going to do a 4-hour Saturday seminar going over all the modules. And in the meantime, you can go in. I know I've only got 6 of them, or 5 of them right now. There's going to be a 6 and 7 by Monday, and then 7 more over the next couple of weeks. And then once I finish those, I'm going to build the stats on the NASDAQ the same way I have for the ES. And so anybody that signs up and takes up this offer now is going to get all the NASDAQ stats included. And they actually, because I have all the templates built and everything, I just got to load the data in there and kind of go through it all. It'll take me a little bit, and I expect I'll probably do that. It'll probably be sometime towards the end of February, maybe a little sooner, but I have to load the rest of these stats in here for the ES first, and some of them are just absolutely astounding. I mean, what you'll pick up and learn. Let's see. Bruce asks if I'm seeing any relative change in the stats in the last 2 months. Yeah, actually, a slight reversion back to the way they were. And I have stats. My annual stats will show that last year was actually a slight anomaly to the way things were filling, and now I feel as though we're kind of going back to uh, some earlier versions. I mean, it's a slight variation, 4 or 5%, but that can be pretty meaningful. And just to tell you, because I remember this off the top of my head, and it is one of the stats that I come out with, since 1970, if you include all the down gap points and all the up gap points together, there's been over 30,000 points of opening gaps. And since 2021, the last 2 years, there's been a little over 10,000. So, that's up gaps and down gaps, total points in the gaps. I mean, you can't afford to miss that potential. I mean, 10,000 points, in the SPX, that's a lot of money. $1 million worth of trades on, just trading one lots. If you get them right in the last couple of years. And I know you can't always be right, but these morning stats put things in your favor. And when you go through the study, you'll see right off the bat, you'll learn there's a lot of seasonality in the gap stats. That's what I do know for 100% sure. There's seasonality by day of the week and absolutely by month of the year. The stats change, and I don't know why. I have no idea why, but there's enough of them for each month to know that there's definite monthly seasonality, and daily and yearly. Things do change. Here's Jan, as far as this, we go over the stats right up to the open. I mean, you're just live. If you're in the room with me, we're talking about those stats right to the open. And I have a base stat that I put out every morning. I can show you that real quick. This is where I start my stats before I go to what I call the enhanced gap stats. Let's go right here, 1 second. And I'll just show you this, no great sweat here. Let me just grab this. We'll actually look at Monday's base stats because I already have them. Well, I have what they will be depending upon where we open. Let's go here, open this, data export, okay, close, get this data export, okay, close, go back here, and right here, let's open. So this is how I start out. I'm looking at my gap stats, ES, let's move that down there. Then I clear out the old data. I put in the new data, and let's see, I got to go to 1.6, and today is the 28th, so let's load that in there. And then put these back. And I got to see where this closed. I don't remember what the 415 settle was. Let me look real quick. Well, let's just say it was even. I use a 415 settlement price versus a 4 o'clock settlement price. Reason to that, not going to get into it right now. But say we opened in the S&Ps. This was from Friday, but say we open 15 lower. If we were to open 15 lower, that's 0.37%. And then I build these statistical models, and this is just looking at the size of the gap only. So then I go in here, we open 15 lower, 15 lower shows a 59.2% probability based on these tables that of all the gaps, based on these percentage size gaps. 59% probability of filling the gap. If it changes, and then I look at that. There's other things going on in here, like I have these tell me that we're the prior day was up 13 points, and that this is, remember I told you I have 22 types of gaps. This tells me what type of gap there would be if they opened 15 lower on Monday. It'd be a type 1 up. And so when I go to my enhanced gap studies, I load that in, and it automatically puts me in a separate category of gap stats. And those, that's these, though they're reflected in these charts. So I go to my enhanced study that has about 150 different variables in it. Size of the gap, day of the week, month of the year, placement of the gap in relation to the prior day's range, where we are in the, other things that I can't really disclose, but, and I'm always working on stuff, but right now there's at least 150 factors on what goes into these probabilities. And then as I said before, you can see even with full gaps here, I talk about, what fills in 5 minutes, what fills in 25, what fills in the first hour, what fills afterwards, and these partial gaps. When I enter all the information in, these stats change, and it'll tell you, are you going to fill in the first 5 minutes? Are you going to fill in the first 25? Or, the probability of doing so. Probability of, besides looking at whether it's going to gap fill, the probability of it going to the prior day's high or the probability of it going to the prior day's low. So there's a lot of stuff that comes with, I'm not only looking at the gap, I'm looking at where it's going to go after the gap. What's the probability that it's going to, like here, in the case of full gaps, I look not only to whether it goes, this is whether it goes to the prior day settlement price. Here we see, well, maybe it won't go to the prior day settlement price. It's only 49% probability, but it's got a 65% probability that if a full gap up, that you'll at least trade back down to the prior day's high. So there's still other trades you can take. And here's the percentage of trades that remain above the prior day's high, 34%. In general, 34% remain above the prior day's high. So what does that mean? You might want to go with it. And my gap studies actually show particular situations when you absolutely don't want to fade the gap and you want to go with it. And well, I've got a couple of examples of some of the stuff I talk about, and some of that will come in like the advanced portions of that course that I'm working on. So that's what these stats show. So you're not only looking to trade the opening gap, you're looking to trade, it gives you the potential of it going to the prior day's high or prior day's low. Don't save that. So there's a lot of information that comes out with this. Now let me see what other questions we got going here. Because I've missed a couple. I missed more than a couple. And if I missed your question, I'm sorry. Let me go back up way up. Whoa, there are a lot of questions. I'll try to answer these. We'll stay a few more minutes. I don't want to be, let's see. Oh, Jan asked too if I trade long-term, short-term. I'm looking at some longer-term options trades. I'm, stuff that you can like put on and watch the paint dry, but like Thursday and Friday, and I don't know if any of you guys are IM Pro people. I even went into the IM Pro room and I sold put spreads, upside put spreads, because I thought that I was so convinced we were going higher, and I was a little disappointed yesterday that we broke down like that at the end of the day. And actually, there was something I was going to look at, but just to show you what the gamma trade looks like and how I can do. I can do that in a couple seconds if anybody wants to stick around for a little bit longer. Let's see what else we got going here. And scroll down here and make sure I get to these questions. Mathematical in your work, do you have a percentage of success on your individual indicators? A range between 58, 64 success rates in my trades over time. All these statistics, they're exact statistics. I mean, there's enough gaps out there, and the way I'm measuring the gaps, they either fill or they don't fill, and the statistics are the statistics. They can't be they can't be played with. I mean, they are what they are. So I'm looking at, you know, when you're looking at these statistics, because they're so quantitative and there's so many of them, they're pretty reliable. Although, I mean, nothing's 100%, although I have found some 100% trades, and there's a few 100% trades coming up in February, and I'll be looking at those probably this weekend. I'm going to take a quick look at them, and hopefully be ready to take advantage of them. Let's see what the next question is. That's strange. Bit quite bullish. I'm not sure what you're referring to, Jan. Let's see. Jeff G. Do they have breakouts and reversals, different open ranges? Actually, that's why I look at my open range, and that's what those intraday, the intraday average 2 range sheet is. That's what I use it for, to look at my opening range. And you see, I do my opening range like this every day. And this is live. I mean, when I do this, excuse me, when I do this, we are, you know, this is live in the morning. There's the opening price yesterday at 40.6375. The open range is the band in yellow. And then if we break out, like yesterday, we had an opening range of 61.75, 21 points, say. And I can't remember what maybe I have this here, intraday. Was that yesterday's? Yes, this was yesterday's, 21 points. So the opening range was 21 points yesterday. The 5-day average was 22.65. The previous day had been 28. The 10-day average was 18.23. 30-day average 23.95. So basically, I look at that and say, okay, the open range was absolutely within what I would expect. You know, 20, 19, 20, 21, $22. It was $21. So the first hour has been running, previous day was 33, but there's 29.80, 25, 32. So, you know, looking at this 20, 21 area where we opened, you know, you'd think that the opening range, the first hour would be, here's the low of 25 and then 30-ish, you know, 25 to 30. And so if you opened at 21, you'd expect to break out of that range, maybe $4 to $8 higher at least, right? That's the way I look at this. And so here's the breakout. And of course, I was expecting much higher, but 4 to 8. And where did it go? That high is 93. It went $11 higher, but my expectation would have been 4 to 8. And it works really well. It does work well. You just, there's another thing that I look at prior to the breakout, and that's, I look at how this develops in here. I'm doing some conditional formatting for trading during later trades during the day, but that's how I use that intraday sheet. So I hope that answers your question about breakouts and reversals. For reversals, I use those standard deviation levels or or my fib levels. Like yesterday, I told people to, you know, sell this put spread in the morning, and when it got up here, I said you got to take some off. You absolutely have to take some off because it's going to work. And then even before the end of the day, going into the last hour, the trade I suggested was about $6 or $7 worth of risk, 8 if you got it on real bad, for a potential of 30 points total, which meant that, you know, you would make 22 at the max. And it got to be like 10 minutes before 2 o'clock, and I said, you know, you can take that off right now, and you're making 17 of the 22 potential points. You might as well take it off. And then right after I said that, 3 minutes later, you could have made like 20 of the 22 because they rallied. They did this pop-up rally, but then they broke, and you still made money on the trade even at the end of the day. But I think it narrowed down to like $4 or $5 from 17, but anyway, so if you ask if I trade reversals, I look at this, and I was looking at that, and I thought we'd close on the highs, which we didn't. But you know, sometimes you got to take stuff off because it falls apart. And I love those late afternoon gamma trades. I'm going to show you what one looks like in a minute. So I hope that answers your question there, Jeff. Let me roll down here and see what else we got. Thanks. You're welcome. Okay. I answered that. I use VWAP with 1 and 2 standard deviation levels. How do your standard deviation levels differ from that? Oh, you use standard deviation levels on the VWAP, James? Mine are just on the actual price of the index. I suppose you could do it on VWAP, and I think the most important thing is, James, if you're still here, if you use a tool like that and you can find that it consistently works for the way you interpret it, stick with it. I mean, if you have something that's working, you know, you can always add other tools to your arsenal. But if you have something that's working and you know how you're comfortable reading it, you know, by all means, stick with it. I mean, it's always good to look around and find other stuff, other tools. But if you have something that works, don't get rid of it. I answered Jane. I do not mean to come. How quick are you to tweet stats on your private Twitter? And I told you we do that in the room, so that's not an issue. What are the standard deviations relative to or measured against, i.e. where do you find the center to plot them from? I plot my standard deviation levels from the 415 settlement price. That's it. They're plotted from there. And there's a reason I use the 415 settlement price. And you can see right here, if I used the 4 o'clock settlement price, this wouldn't have happened here yesterday. It would have been someplace else. Let's see, cool. First hour is opening range. No, first 25 minutes is my opening range, Donald. I use 25-minute opening range. Got a lot of reasons for doing that. Do you call gap stats as they occur during the morning? Yes, I do, Jeff. We go over those right up to the opening. I'm working. I think I'm going to try to deliver them a little better. I'm always looking at ways to improve things, and I think with another 100 hours of programming, I can deliver them in such a way that you can kind of like read across if the market moves up or down from where it's currently trading on the stats. That, you know, you'll have like a matrix, and instead of just one box, you might have like 2 or 3 boxes together that you can scan with if price moves up or down and see the odds change without me changing the inputs. I'm going to work on that after I finish this course, and I think I have a real good idea about what I want to do, but it will absolutely take me 100 hours to do it of programming to you know, get it set up right. But that's definitely a goal to do a better job there, so we can take advantage of those stats. even more than we do. Thank you for all the work you do. You seem so very dedicated to finding out the data. Yeah, James, I'm obsessed. Because in trading today, I've been in the markets since I started working at the CME in 1982, the year the S&P started trading down there. And over the years, the thing that's changed the most is we have these HFTs now, and they're liquidity thieves. They do not add liquidity; they take liquidity. So the only advantages that we can have, I mean, we have to trade a little bit with a little bit longer time frame, and we have to do something we have to look at quantifiable statistics to help us in making our trading decisions. They trade on latency and rules that latency latency and pricing. They get rebates and can trade scratches for free. They definitely have the speed because they pay for access and whatever else they do. I'm not even going to get into all that. And then they have rules that benefit them too, and I'm not going to get into those, but there's a lot of them. Yeah, they in some cases they can cancel and not lose their place in the queue. That's just wrong. Jeff, sounds great. DUSD levels use VIX index X calculation. I look at the VIX, and it's interesting that you asked that because I'll actually show you. Let's see. Let's go. I got to remember where I'm going here. I'm going to go use this. And let's go here to the SPOO. And I think I already took this off, but let me go see. Oh, no, I didn't. Here you go. Here's the answer to your question. Here's the spreadsheet on the stats for, in this case, I was looking at February, but let's just clear this out. Oh, I already did clear it out. I forgot it. This is everything. So I cleared it out when we were looking at things. But to answer your question as to whether I look at the VIX, let's unhide this now. See if we can get this popped out here. So this is the daily range data right here. The true open, which I mark on my own stuff. Come on. It's taking a while to open this up here. There you go. And then I look at the 4:15 close. Of course, I keep track of the 4 o'clock settlement. And then I look at the 5-minute range of every day. I look at the first 25 minutes. I look at the first half hour, the first hour, and then every hour there afterwards is all the data in there. This is some conditional formatting I'm doing. That's why this is color coded. There's the last couple hours of the day. Then the last hour, I look at the last 30 minutes in this particular study. Some of them I look at other things, but this particular study, I use that. Then there's the last 30 minutes, and then the post 15. That's my trading day data. And then what's the first thing that comes after that? VIX, open, high, low, and close for every day. I definitely look at the VIX, and I can filter for VIX levels throughout this whole, any study that I want to. I have the VIX automatically built in. And then of course, I look at the standard deviation levels, and then what I was just looking at there. Here's just the open and close, and there's some other stuff I look at, but definitely look at the VIX levels and and in my in that pro video section, there's a study on the VIX, 6,000 days of the VIX. It's like a 1-hour video, and there's some downloads. Absolutely will change the way you think about trading. So let's go to 1 or 2 more questions, and then I'm out of here. Whoa, we are way over time here. Much easier to see stats happening real time. I'm not sure what you mean by seeing stats happening in real time. Not sure what that means, Jeff, but uh, anyway, that's all I have. I hope you guys, I made this offer for this gap course, and I've I've probably got, well, I have literally over 1,000 hours of work into my gap studies. So, and I showed you 1/100th of the stats that will be made available with that course. I mean, I I have like just hundreds, probably there'll probably be close to 12 or 1,500 total statistics, when you look at, gaps by points. I mean, there's a dozen statistics. Uh, there's just dozens of statistics. Uh, uh, Ronnie, the 1440, I absolutely teach. The fib stuff, the thing about the way I do the fibs is like an art. And if you're around long enough, you'll kind of catch on to some of the stuff I'm doing. I haven't, it really is an art, but you'll see. But the 1440 stuff, I'm in the room every morning, and you can ask um, any question. You can ask questions about anything: option strategies, uh, uh, because I like to trade options. You can ask about my charting methods. You can ask about my charting levels. Um, there's other people in the room. I like people to talk. By the way, I'm gonna very quickly. I should unmute all. Anybody that wants to get on and ask a question instead of typing it, if you're still here, go ahead and take a shot. But I'm available every day. We're busy in the morning, but until 10:30, I'm absolutely available every day. 10:30 Eastern. I'm in Colorado, but that is. I definitely teach that, and we go over it, and I do some things that I use that are pretty unique, and I think you would find them interesting. Well, I'll go into that when you sign up. So the 1440 method, and I'm going to build some more PowerPoints. I've built so many PowerPoints now. I'm kind of getting more used to it, and I have a template that I'm using for like almost everything now. So I'll probably build a 1440 voiceover course. I mean, I have a couple of them already, but I think I'm going to be able to make them better. I'm going to do some stuff with the Ichimoku at some point in time. I'm always working, developing, but my next big project after this gap course, which I will probably offer, because as I said, I'm going to do a 4-hour seminar going over everything, and we'll probably go over some stuff like after the close during the week for people that can't make it, because I'm here, and it's just all good. And as I say, people that sign up now are going to automatically get the NASDAQ stats when they come out with them, and that'll probably be about another month. Let's see. So just get any day to data can get access to your gaps. Ronnie, I'm not sure exactly what that means. Do subscribers just get day-to-day data or can they get access to? Well, the data that I'm giving away with the study, I mean, you're going to get that data, and it's data like I just showed you. I mean, what percentage of up gaps, simple up gaps filled, da 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 da. But as the course progresses, the one I showed you was just simple gaps, but then I'm going to get into partial gaps, full gaps. What happens when the prior day is up or down, and all that data is. You're going to get data you're not going to believe. You will never get it anyplace else in the world, ever. Jan, he really is. I've known Danny for over 30 years. He was a broker on the floor. I was a trader on the floor. We've known each other for 30 years. Um, he's, I didn't have a room. I was using, this GoToWebinar for my room, and Danny's like, come on, I can, get you exposed to more people. I can get you a room, and it's really convenient because you can log into the room anytime. And, you know, and it's because it's our room. I can flash charts and tables and stuff up there in our room, and it's really good. And Danny and I we're both around the same age, from the same generation, and having known each other for so long, we get along good. I mean, it's a good relationship. I'm happy. I've been on the Mr. Top Step platform now for, I don't know, 6 months, 7 months, and it's been nothing but good. And it makes my life so much easier just to be able to pop in the room, turn it on, and you're all good to go. I mean, it's good. And Danny comes in, and he's got we have, we're probably going to start doing some stuff together, like talking together and talking about the market and doing things together. And it's all, it's constantly growing. I mean, my ambition, first of all, my statistics are getting really, I mean, my statistics are institutional quality. Trust me, Goldman Sachs or JP Morgan or any big firm like that would love to get a hold of what I'm looking at. Jeff, that's part of the course. Um, uh,
Hi, Richard.
but I'll tell you, partial gaps is when you open within the prior day's range. Full gaps is when you open outside of the prior day's range. And then there's different kinds of full and partial gaps. I told you I have 22 different types of gaps. Somebody was just talking. Go ahead.
Yes, thank you for sharing, Richard. I was curious.
Who is this, by the way? Just so you introduce yourself.
I'm so sorry. What?
What's your name?
I'm sorry. This is Bruce. Bruce.
Oh, Bruce. Okay, Bruce. Thank you.
Thank you for taking the question. I trade S&P options, and in the last few months, we've seen giant building volumes in the zero DTEs.
Oh, you sent that question to me, didn't you?
I did. Thank you.
I'm sorry. I have been so busy, like setting this up and getting ready. So your question is do I think that's affecting what's going on?
Yes, that's the idea. What's the structural problem?
Absolutely. It's not a problem, though. It's not a problem. It definitely has an influence. And here's a good example of that, Bruce. Bruce, right? I'm sorry, I want to get that right. Let me go here. Let me go here and find my. I'm going to show you what I had from yesterday. If I still have this real close and available. Let's see, January. Oh, you know what? I'll just have to open up the program. I have what I call one of the reasons I started out on this whole road of statistics was I thought with the Max Payne theory, because there were so many options trading, I could figure out what options were going to expire, and where they were going to expire and how that was going to work. So that's why I originally got in and started programming. Longer story than that, which I'll tell you someday, but not now. So I built this model to actually look. This is a model that I built, and I download this several times a day, every day, and it only looks at the expiring options of the day. Here was yesterday's. This was the max pain point yesterday, 40.70. You see that? That's yesterday's max pain point. We were trading up here at the end of the day. This is a ceiling, and the max pain point theory works, just not the way people think it works. But this was yesterday's graph, and I am kicking myself in the ass because we were trading up here at the end of the day, and because it was the end of the week, we have been on up weeks, especially when we're making new highs for the month, trading at the absolute high tick. I did not think they'd give it up yesterday, but where did they give it up to? 40, 70, 56. What's the max pain point? 40, 70, 56 on the daily. I put this out every day. And this is where it started out in the morning. And as we ratcheted higher, it was 40, 50, then 40, 55, then it went to 65, and then to 70 at the end of the day. This was the 330. That was my 330 max pain point. I calculate this. I calculate it 2 or 3 times during the day in the morning, and then definitely at like 3 and 3:30, absolutely. So we know, but that's what that did. And to show you, I can go back here and show you something else that's actually kind of interesting. Let's see, I got to go here. No, I got to go to the, let me go to my OneDrive and find this compliance, come on. And go down here, and that's the 333. Let's just take a look at yesterday's 333. This was my download from 333 of the that I generate that study from. I'll show you how it goes through here. But anyway, the reason I'm looking at this 333 is going to be very interesting. You're going to love this. So, okay, here's the puts. 333. Go down here. Go down there. At 333, the 40/70 puts were trading 12 cents. The 40/75s were quartered. Here's 20/30, 10/15, 10/15 for the 40/70 puts. Now they ended up out of the money, but the 40/75s were trading 20 cents at 30 cents in the SPX. The 40/80s were 65/70. Those almost, that the 65 cents, that's $65, and they ended up at $1,000 at the end of the day, 950. Isn't that so? I'm really kind of kicking myself in the ass for not thinking that we could drop back down here, but we haven't had a big down day, like give it up like that in the afternoon, like that for quite a while. Anyway, does that answer your question, Bruce? Are those options?
Yes, it helps somewhat. My thought is that the amount of options that are being pushed in these strikes are somehow leading prices and lifting. I've noticed last week that we had a very continual pattern of a movement off the open, a retest, a run from 11 or so all the way to the tail of the day, and then a fail.
Well,
and watch these options, and they were building up to 300,000 contracts and 400,000 on single strikes, all the way up and down the rack.
Well, that's why I brought this to bear here. Let me go back here to go here. That's why I look at this. Now you're talking about this. The way this works, the vast majority of the time, and I've actually gotten to know what the patterns are, because these formations can be much different and they mean different things. But this particular formation, looking at this yesterday, I thought they would settle right at 4,100. I really thought, but they were not going to go above that. That's 114,649 options traded there at that 41 strike yesterday. And remember, at expiration, had we rallied up there, that's like 228,000 futures, because SPX is twice the size of an ES. So they're either in the money or out of the money on the close. So they act like a ceiling when it's a formation like that. It really does. It's very rare that they go through this, but I thought they'd end up right there anyway because of the other things that I was looking at this week. But instead they broke down. And as I said, had I followed this instead of this idea instead of this idea, you could have bought the 75 puts or the 80 puts for 65 cents. That's $65. They settled at $9.50, $9.46 to be exact. But you'll learn.
Yes.
You'll learn based on the changes, you know, what's going on in here. Sometimes things change, but it's definitely part of the market now. It definitely affects the way the market is, but you can look at some of these things and say, no way it's going through that. It's not going to happen. And I think it's because whoever sells this stuff, that's just their way of saying it's not going there. And the other thing is, you know, that 4109, that 4100, the fair value yesterday was like $14. So $14 from that is 4096 in the cash. And so this is the equivalent of a 4096 cash level. So the 4100 was actually over little better than one standard deviation higher in the cash. And if you look at my cash sheet, let's see, weekly, here's my standard deviation. Here's the one standard deviation level in the SPX yesterday, 4098.64, just under 4100. So you can look at that and look at those levels, look at your options. You said you're trading SPX options or ES options?
SPYs.
Well, and if you're trading SPYs, then all the better. Here you go. Yeah, see which one is the weekly. Yeah, I have the SPYs here. I just gotta. Well, actually, the weekly ETFs. This is 1 day, one standard deviation. Here's SPY. SPY yesterday, one standard deviation move up was 408.54. What was the high yesterday? I haven't looked at it yet. Bruce. Oh, here.
I'm sorry. It was close to that. I'm not sure.
I'll be exact. I can go grab it. I'll look. Let's go here. The stocks. SPY. By the way, here's my Apple chart. And I talk a lot about Apple because Apple's the biggest stock in the world. And what did they do? They went above my second level here on my up move, but they settled below it. But now let's look at SPY real quick, just for curiosity. SPY. I have a couple other things. I could stay here and look at stuff all day long. SPY, the high yesterday was 408.16. 408.16. And what did I say my standard deviation level was? 408.54. A little higher. But still, when you're talking like basically a $3.50 move, you know, it's not off by that much. Anyway, these come out every day too, and then I put the weekly levels out too. On this starts out at a 5-day, and then it goes 4, 3, 2, 1, and the other sheet is 1 day every day. SPY, really good stuff.
It is good. Thank you. May I ask one point to clarify?
At any point. I'm doing my best to answer the questions.
Thank you very much. On your maximum pain chart, that 4100 heavy point, that it proves a magnet, if you will, that you said it's unlikely it could get through.
In the way that particular one is laid out, I save all these, and I actually have done a study that shows the way we look at them. And after you look, because I put those out every day. I mean, so I have hundreds and hundreds and hundreds of them of days of those things. And that particular one, this one here, the way this is, and you're trading lower, absolutely acts as a ceiling. I think in the last year, I may have seen it go through something like this maybe a couple times, and that's it. It just doesn't do it. Doesn't go through it on the upside. On the upside, it acts as a ceiling. Even though this is a floor here, I guess I can't flip-flop this stuff now because that's the way I started out with. But I go through these max pain calculations. Like I download the stuff, and then I actually go through. This is a different calculation than regular max pain, and like guys that do regular max pain. Well, I'll go through here and show you. I got to go back to this. This is what I do every day. OneDrive. See, I download these from my other computer because I have so much running, and I have a trading computer, and and I pull these off my trading platform, so that's why they're live and fresh. And then I run them through my program. Let's see, that was the 3:33, the last in the afternoon. So let's just, like, I would grab this, and now I've run it. Now, if you were just looking at the way most people look at this, it would look like this. It would look slightly different, but when I run it through my enhancing kind of program, let's see. Let me go back here and do this. Do I run it again? Oh, I have actually a couple of ways to do this. Run. This is a different look, and they're all slightly different because they're different programs, but this is the one I use. But they all, I mean, yesterday with the way they went through, they all showed the same thing. This is a ceiling. It's very unlikely to go through, but sometimes you'll see, if you ever see, and I'll tell you this because you got to have this program to do it, and nobody has it except me. But like yesterday, should there have been, like, the next bar was like almost equal, and the next bar was almost equal, and I've seen like 3 or 4 bars be equal after this. Like, so instead of one, there's like 4 in a row that are just like this. When you see a setup like that and it goes through, it just builds on itself, and it can rip through 20 points in 20 minutes. And I've seen them go 20 points in 15. You know, on the up and on the down. When you get a setup that's like level, and I've got examples of that in different places. I just don't have one handy and one that I can think of right now. But
are you saying that level was like a serious pain point for a handful of big players that they could not let them go through unless, and if it did, it would be a short squeeze type thing?
When you get a bunch of those levels together, and you have chart points that are, you've also got to have no resistance in the chart above it.
Yes.
You know, like yesterday, not only yesterday's chart, if we go back and look at that, and I've got to cut this short here pretty quick. Yesterday's chart, that 41 even was, you know, it was really close to the 1 standard deviation level too. So you've got some natural resistance up there 1 standard deviation away. I mean, even if there's nothing else there, there's that 1 standard deviation level. Plus, 4,100 is a big round number, and big round numbers are numbers that, you know, can serve as support or resistance. So they work that way. I happen to think we're going through this next week. I would have liked, if we would have closed above 4093, which was my big number, we are going a lot higher. Because they at least closed above this 4070 half, which I was so bullish on the day before, and we're still above there. So I think we're going higher, but we'll see. There's other factors that are going to affect it.
Thank you so much, Richard. I appreciate that.
You're very welcome, Bruce. Let's see, where is the data for SPXW options from? It's from my trading platform. I just download all the options. I download every strike in whatever series I'm looking at. 40815. What's that, Ron? I'm not sure what that is. 40816. what stat is the best for daily use? Not that you have to show it. Not sure. John, there's tons of stats for use. There's no best stat. There's just stats for different things. What's your target? Over 4093. That's why I have subscribers. And trust me, I've had this level on here for a long time, this 4093. I mean, a week. And a week is a long time for a target. And we finally got to it. And then it rejected it. And then it went up here and rejected there. I was surprised. Let's see. You still teach the 1440. Oh, Ronnie was also asking, do you have any stats on? Do I have any stats on intraday VIX? Jeff's asking. Actually, I have the daily stats on the VIX going back to 2007. I have all the stats. I have the best database in the world on that. And I'm going to build some intraday database on that at some point in time this year. But I mean, that's like, and I just got through building the intraday database on the ES, and it goes back to, I think I have all the 5-minute data on the ES loaded into my database with some other indicators that I watch going back to I think 2007, the same way I'm doing anything. There's 4.5 million bits of information in the database, and I haven't even begun to use it. I got stuff. I have hundreds of files and databases that I can answer almost any question to anybody. It's a matter of time and what I can do. Do you have any stats on intraday tick correlation movement? And that, Jeff, that's exactly something that I'm going to be working on later on this year. What's the difference between just monthly membership versus this class? Actually, it's at some point in time, and if I just sell just a few of these monthly courses, it's just gonna be a requirement that you take this class, because I won't be able to do everything that I do without it. And I give if you like this webinar and what you learned here, and you sign up for that course and you stick with me for 3 months, you'll get this every day. Every question you ask. Do you still teach 1440 month? Yeah, I do. With just I don't teach the fib stuff. I do not teach that. I teach my standard deviations, and I teach my levels. The fib stuff is an art. And I'm constantly redrawing, to figure out what's the best one. Do subscribers just get day-to-day data or get access to the gaps? I'm not sure, Ronnie. They're going to get all the data that I'm giving away. By the time I'm through, I told you there's 150 pages of PDFs right now, and of that 150 pages, and what I did at the end of every lesson, I'm grouping the data like together in one page, so you don't have to go back and forth and screw around with pages. You can just look at it in one place. I'd show you that, but then people would take screenshots and, well, what do they need me for? And I've literally put in thousands of hours of work into these studies and these programs, thousands. And I keep putting stuff into them. And I just can't give it away, because you can't get this anyplace. You couldn't buy this. Well, you could, but it would be more than most people could afford. Let's see, there's the Mr. Top Step question, full, partial. I wanted to ask, do we get the database to see new things on our own, like you use the data? No, you don't get my database. You get the data that I give you. The database, that database is priceless. That's my 40 years of experience. If somebody wants to buy it, I would sell my database, but it would be in the millions, literally. I wouldn't sell it for less than, over $1 million, because that's what it's worth. It's probably worth more than that. the question I wanted to ask is, do we get to, oh, yeah, that I already answered. Yeah, I have stats for years. I just have to update last year's stats, and then I'll have the stats by years module loaded in by later on today. And then the stats by days of the week, I hope I'll have by Monday or Tuesday, and then the stats by month after that. And then I'll start adding the stats in for other factors affecting the opening gap. And I have hundreds of stats. I have thousands of stats. You're welcome, Jeff. If someone like wanted to program themselves to see, let's say, what the closing range is within the last 20 minutes of the data, I mean, the source of data is what I'm asking. It depends on how far back you want to go, and it depends on how good of a programmer you are, and it depends on if you know what to look for and what's the last 20 minutes. Is the last 20 minutes the 4 o'clock close? Is it the 4:15 close? I actually have a study on the closing range, and I'm toying with it. The data, I spend a lot of money on data. First of all, I'm considered a professional trader, so I've spent hundreds of thousands of dollars on data over the last 5 years. It's just a lot, because it's a lot of money every month, and I bought data to begin with. So you'd be hard pressed to get as much data as I have. Well, very few people have as much data as I have. I mean, unless they pay a lot of money for it. Let's see. Do you have data for individual stocks and ETFs as well? Richard, yes, I do. To answer your question, I do. I don't have it all, but I have a lot of data for a lot of stuff. It's my data package. That's why it's so expensive. I can pretty much, on big stocks like Apple or Amazon or Netflix or any highly liquid stock like that, I can run those stocks in my programs. Let's see what else is going on here. Ron, what stat best for daily use? I already did that. What's your target over that? Point being that there are so many stats. Thank you for your time. So many stats. Thanks for sticking around so long. Yeah, Jeff, you're welcome. I don't sell any indicators. The only indicator that I recommend that everybody trade with, and regardless of whether you get it from me or anybody else, you need to have some kind of standard deviation levels on your charts. Mine, I think, are good because I use a 4:15 settlement price, and I don't think, and I can customize mine to do. And there's a lot of things about what I do that are, special. I have some special settings for my volatility indicators. So and little quirks about where I measure from and how I do things. Okay. Yeah, and Jeff, I have to scrub. No matter who you get your data from, I've even bought data from the exchanges. That's bad. The further back you go in time, I mean, you start going back to the old pit days, and the data is not as timely or reliable. And even some of the electronic data is not as timely or reliable. And there's been changes in the way the data was configured. Like a lot of people, I saw some guy like talking about, oh, I've got this VIX study going back to 1992. I said, oh, really? Unless you totally created the data yourself, which would be exceedingly hard. They didn't start calculating the VIX until like 2003 or 4, and even then they were doing that on the OEX, not the SPX. They changed to the SPX in like 2005, and then some of the data was unreliable because I know I got the data from the CBOE. I bought data from them, and then I called them up and I said, well, some of the stuff is wrong. And I finally got a hold of somebody that had been around for a long time, and he says, oh, you're an old guy, because only you would know that they changed that, and that's true. And there's even data in the ES that I absolutely guarantee you don't know has changed, but it's changed over the years a few times in ways that you don't know. I use eSignal, by the way. I've used eSignal for over almost 25 years. I used to use CQG, and then they went up in price 25 years ago, and I started with eSignal, and I've been with them ever since. And even their data, I have to scrub the data. I have to go through and check things. You know, before I build my databases, I do like 20-point checks on everything. And then I have other things about my data that I do that's kind of unique. Anyway, wow, we're almost 2 hours now, so well over. Once again, I appreciate you guys coming by. I appreciate the people that really stuck here to the end, you know, for sticking around. And this is just, what I'm doing today is what I do every day. I stick around, I answer questions, I work, I do, and I'm hard at it. So it makes, I'm gonna enjoy the rest of the weekend finishing up those studies, Jeff. Anyway, thanks for coming by. I hope you subscribe. I hope you check it out. If not, you know, good luck trading, and at least pick up standard deviation levels someplace. Thanks, guys. Appreciate it. Thank you for your time. One question for those of you that are left too. If you go to my Twitter feed, my HandelStats Twitter feed, if you like this webinar and you thought you learned something, I mean, it wasn't. I mean, I of course I want to sell what I have, but if you learned something and you thought it was valuable, I'd really appreciate a shout out that, you know, like it was a great webinar, you really enjoyed it, you got something out of it, because I want it shouldn't be anybody's waste of time. It would be a waste of mine, but I hope you enjoyed it, and I would appreciate that. So follow me on at HandelStats, and I hope you subscribe. Check out the website. We'll talk to you later. Thank you. Bye.